So I've been on a few podcasts lately, and a question that often pops up is this.
This point in time आपकी नेटवर्थ कितनी है?
What's your portfolio size?
सीधी बात and no bakwas. What's your current net worth?
Seedhi baat, no bakwas. Okay, anyways, I've been quite open about this, so here we go. The current portfolio is a little over 10 crores, but the bulk of it, about 6 crores, is in mutual funds, and that's what we'll be discussing in today's video. I'll keep this a bit free flowing, matlab there's no pakka structure to this, but if one listens carefully, we should have gone through things like when did I start with MFs, where all I'm invested, the current corpus, what's working, what's not, SIPs, portfolio allocation, my learnings, and much, much more. The idea here is not to brag or boast, but if you are someone who is new to wealth creation, or if you feel you're a little late to the party, then I'm sure you'll find these 15 odd minutes very useful and inspiring. Let's begin. Okay, let's start with those 6 crores, and I'm sure some of you are thinking, proof kithe hai? Where is the proof of that? To answer this, I'll be making use of PowerUp Money. It's a platform that helps people track, evaluate, and invest in mutual funds. And pleasantly, it's all automated, which means I can't game the system. So here's me feeding in my mobile number and PAN. That's all it takes. And as you can see here, my portfolio at the time of recording this video is a little over 6 crores. It's a number that took me 10 years to achieve. And again, as proof, let's go to where it says portfolio journey. Okay, so this is where I am. And look at this. 14th of March 2015, and what I had as my MF portfolio on that day was a mere 20,223 rupees. This should not come as a surprise. I've said it in many of my podcasts, and the fact is my story, my true financial story, starts only from the year 2015. If one needs additional proof, here's a screenshot of my March 2015 CAS, my consolidated account statement, and see this. 4 lakhs in NHAI bonds, 75,000 in stocks, and just some 45,000 in mutual funds. So the 75 is now around 1.4 crores, while the MF 45,000 is a solid 6 crores now. This portfolio did go through ups and downs, but thanks to systematic, thoughtful investing, it generally kept growing, and today it's at a level I'm genuinely proud of. Okay, while we are at it, let's also look at the performance. And in spite of all the harakiri I've done in the past, especially in the first 5 years, I'm happy to see a portfolio XIRR of almost 13%. Understandably, equities have done a lot better. You can see a number of schemes around 19, 20, even better than 20%, which is good. Debt funds have delivered in the 6-7% range. And although I was very debt heavy in the beginning, I'm somewhat done and dusted with this category. And then there are the hybrids. And one can safely say these have delivered in the 12 to 13% range. Now, I'm sure you've noticed this, but I have like 84 active funds currently. Kuch purane paap hain. Believe me, there's a method to my madness. But let's not take it as an excuse. 84 is a bit too much, of which 36 are equity schemes. So it's a bit messy, and just to be clear, messy doesn't mean ineffective. All it means is cluttered. And now imagine my joy when I sat down to review my portfolio and discovered this feature on PowerUp Money called Portfolio Performance. As you can see, it's a clean, easy to understand snapshot of how each of my equity funds are performing, which can then become the basis for whether I should top up, hold, or exit a scheme. So as the name suggests, inform means the top performers, and I have 17 of them, yani ki 50% of my schemes are outperformers, shabash. Another 12 schemes are on track, so basically lage raho, these are a bit better than average. 10 of them are off track. Okay, I'll not invest any further in these. And just 3 schemes have been labeled as out of form. देखें कौन से schemes है ये? Oh, इसमें तो एक SIP भी है. Actually, let's examine this Mirai Asset Large and Mid Cap Fund. Okay, so it's been out of form since January. Actually, let's do the 2-year performance. Acha, so this was on track in 2023, but it seems the performance has deteriorated over the past 1.5 years. On a rolling basis, the scheme has struggled in the past 1 and also 3 years, and the trailing returns have been a lot lower than the category average. There's also a tab here that says rank trend. Let's try this. There we go. So see this, the performance has been either bad or average for many quarters now. To simplify things, the platform also assigns a power rank, a proprietary score that's based on returns, recency, and stability. Now for the Mirai Asset Large and Mid Cap Fund, it's at 24 on 26 within its category, not very good, which means I need to find a suitable replacement. So what do? I tap on View Leaderboard and see this. There's now this very precise list of the schemes that are doing well and some others that aren't that promising. On my part, I can maybe pull up the top 3-4 funds, do an evaluation, a review, and if everything's fine, I can swap my investments in the Mirai Asset Large and Mid Cap Fund with an alternative scheme. I should mention this feature, Power Rank. It's a part of PowerUp Money's Elite offering. I recently bought this, I'm a member, and here's what Elite offers. So as I said, there's Power Rank, which makes the selection and the deselection of funds extremely effortless. So you now know where to invest and what to avoid. Then there's Rank Trends, a bird's eye view on how fund rankings have shifted over the past 24 months, making portfolio review a lot easier. And thirdly, Elite features Power Rebalancing, a tax-efficient quarterly rebalancing that's aimed at maximizing your risk-adjusted returns. This is one feature I'm really looking forward to. It's likely to come up anytime now. I think the team said 15th of August. So if you're someone who doesn't use a financial advisor, has a bit too many funds like me, and if your focus is to build long-term wealth, then do check this out on the PowerUp Money app. App access is completely free, and if you like what you see, then do explore Elite. Okay, we continue with our review. Let me take you through my portfolio allocation. And as it stands, I have 56% of my MF portfolio in equities, while non-equity, that's debt, hybrid, gold, etc., this is at 44%. Let's start with my non-equity, and this 44% is actually three things. Firstly, there's gold, SBI Gold Fund. I think that's what I have. It's just 3%. I wish I had more of this. Then there's 23% in different debt funds, and a large chunk of it is AAA rated instruments, which gives me safety, although the returns are a bit low. And then there's the balance 18%, which I like to call my feeder fund. This comprises some debt funds, some hybrid funds, so money market, equity savings, and arbitrage funds. It's not a small number, it's about a crore. And why I call it a feeder is because there's always an STP, a systematic transfer plan, that's linked to it. Let me not get into the specifics of an STP. You can figure that out on ChatGPT 5. But essentially what this means is that all of this money, this entire 1 crore, will be pushed into pure equity funds within the next 2.5 years. In other words, what you see today as 56-44 in terms of equity, non-equity, I think this will be more like 75-25 or even an 80-20 by the time I am 50 years old. If you want more specifics on this, kindly watch my video on building a strong and successful portfolio. I'm sure you'll find it very helpful, especially if you are in your late 30s and 40s. Cool, now let's focus on the equity part of my MF portfolio. And if you've seen earlier, I have 36 active funds there. I know it will be very tempting, but please don't ask me in the comments why I have this fund and not this fund. Can you tell me about this fund? How did it become 36, etc.? I won't, and I probably don't have an answer for most of these. But one thing I can tell you is that of these 36 funds, my real focus is only on the funds that are marked as an SIP. So there's Parag Parikh Flexi Cap, Mirai Asset Large and Mid, HDFC Small Cap, SBI Healthcare, Quant Multicap, and so on. It's all there in this tab that says active SIPs, 15 of them, which is not entirely accurate because this includes my STPs also. That's fine. I don't think PowerUp Money can do much about it. It all depends on the feed that they receive from their service provider. But to simplify things, these 6 schemes are the STPs, while these 9 here are the SIP. These SIPs take my total monthly outlay, that is the incremental money I invest every month. This comes to 1.86 lakhs. So no, it's not 84 schemes, it's not 36, not even 15, but where I focus are just these 9 SIPs, and of course my equity blueprint, which I like to call the 3x3 grid. You might have heard of this in many of my podcasts, even in some videos, and very simply, it's a box, a grid of 9 squares that combines the market cap and the style of investing into an equity MF selection strategy. So very quickly, on the vertical axis, I have the 3 market caps, large, mid, and small, while on the horizontal axis, we have different styles of investing, namely growth, value, and momentum. As you can imagine, the idea here is to fill up as much of this as possible. For example, a scheme like PowerUp FlexiCap would fall at the intersection of large and a little bit of mid-cap on the vertical axis and let's say under value in the horizontal axis. The same process can be repeated for other schemes, and just to give you an idea, I've incorporated a few of my schemes here. One has to also define the proportion, which in my case and per my comfort is a 50-25-25 between large, mid and small, and amongst the styles it's 70, 15 and 50. Understandably, to define every scheme per a style is a bit difficult, but an examination of market caps on PowerUp Money shows that I'm very close to where I want to be. So this is what I'm comfortable with. It need not be your structure, but I'll suggest you try out the 3x3 grid. I've been using it for 4-5 years now, and in addition to giving my MF portfolio a proper structure, it also helps me diversify with a lot more confidence, and it clearly reduces confusion with me not having to chase every fund recommendation or NFO that comes my way. So lots of benefits. Do try it. Alright, so all this was a lot of numbers. For this final section, let me walk you through some important mutual fund specific lessons that I've learned over the past 10 years. Number one, always invest systematically. I know always is a strong word. Even I follow this rule only 90% of the times. But the reason I'm a bit insistent on this is because there are lots of these strange videos that are going around. And my suggestion is, as far as possible, stay consistent with your SIPs no matter what the market is doing. My SIP in PowerUp FlexiCap is a good example of that. It's about to complete 10 years, and what began at an NAV of just 17 rupees is now a little over 90. And it's not just PP affairs, but every SIP I've done and have persisted with over a period of time has done well, and I'm sure it will continue to do well and make me a lot of money. A second lesson is to not panic on temporary underperformance. Let's stick with PowerUp. Here's the rank trend of its FlexiCap fund. And because I'm seeing the 1-year trailing returns, it shows that the year 2022 was a rather tough period for this fund. This happens with every scheme, or rather every strategy goes through ups and downs, and that's also why the 3x3 grid suits me, as it automatically takes care of different variables, giving me a structured and an almost passive kind of investing framework. Lesson 3 is on having a wealth building mindset, and here's the hard truth. A pessimist never gets rich. In my case, and the first time I invested, the Sensex was at 4,000 something. Today, the same Sensex is at 80,000, a 20x jump in the last 2 decades. But along the way, there were many occasions when the markets fell by 10% or more, not just over a few months, but even on a single day. My point is, to be successful at investing, even if it's mutual funds, one should have the courage to believe in the future. You should be adaptable, as in understand when to be aggressive and when to defend, and finally let time do its work. Alright, let me stop at 3. I'm sure there are 30 lessons. I can go on and on, but let's save that for another video. That said, I do hope this video and my journey so far will serve as an inspiration and as a reminder to many that building wealth doesn't require brilliance or take a lot of risk in the process. All it needs is a simple plan, disciplined execution, and most importantly, the patience to see your money grow. And to help you with all this, there's of course PowerUp Money. And in addition to what I've covered in today's video, don't forget to get your portfolio reviewed there, and that too absolutely free of cost. Once again, thank you for your time. Do like this video, do subscribe to my newsletter, and I'll catch you next week on another video. Until then.